Hi, I'm Brandon Poe, founder of Poe Group Advisors and creator of the Accounting Practice Academy. You are listening to the Accountant's Flight Plan podcast, where we talk about stuff in the accounting world. If you're looking to buy or sell a practice, we are the premier accounting practice intermediary firm in the industry. Check us out at pogroupadvisors.com. If you're a firm owner looking to build a more profitable practice while actually reducing owner hours, sign up for our practice management workshop, which only runs a few times per year. Learn more at accountingpracticeacademy.com. Welcome to Accountant's Flight Plan. I am super excited today. We have Jody Grunden on. Did I say your name right, Jody?
Yep, sure did.
Perfect. So Jody is an accounting visionary. He's got over 20 years of experience in the profession. He's helped pioneer innovative changes within the industry, including the introduction of the very first subscription-based billing method employed by an accounting firm. That's a cool first, Jody. I love that.
Thanks. Appreciate it.
So he and his partner, Adam Hale, they co-founded Summit CPA Group in 2002, which merged with Anders CPAs Advisors actually just this year in 2022. Summit, now a division of Anders, was the first fully distributed firm and the leading provider of virtual CFO service in North America. And with this merger, Summit brings to Anders a number of benefits which help to continue Jody's vision of, and I think this is in your LinkedIn, changing the way people think about accounting.
Yeah.
That's no small order, including strengthening the now hybrid work environment, building out the advisory side of Anders with a virtual CFO service model, and implementing weekly subscription billing rather than hourly billing, which is very cool. So Summit partners business owners with a dedicated CFO and a team of accountants, CPAs, and tax professionals to help guide their business to success through cash flow management, business tax planning, and financial forecasting. You got a long bio here. We got a couple more things to mention. So he's also the author of Digital Dollars and Cents. Jody literally wrote the book on helping digital companies create a financial roadmap to success. He's also the author of Building the Virtual CFO Firm in the Cloud, which provides a blueprint for the future of accounting. Jody's specialties include virtual CFO services, creative agencies, and remote team management. Welcome, Jody.
Yeah, thanks. That's a mouthful.
That's quite the bio, but it does paint a picture, doesn't it? It's I love, it looks like you've done some pretty cutting edge stuff in your career, and the first subscription model. I love that because it's amazing to me that so many accountants are still on the hourly model. It's like,
oh, I know.
I don't know. I just think of it as such a antiquated way of pricing your services. And we'd like to get to know you just a little bit better. So give us a little background, like how you got into this accounting business thing. And
yeah, that's a great question. I actually talked to a bunch of high school kids on Tuesday to tell them exactly the same thing. So that'll be fun. Accounting, it was one of those things. I wanted to go into finance initially. I thought, I want to be a stockbroker, and then living in Indiana, going to Indiana University in Bloomington, and then realizing just the epiphany is like, well, that means I have to move to New York or Chicago. I was like, well, I don't want to do that. So I kind of made an about change. I thought, accounting sounds like that would be something that I can always benefit from, and it kind of go over multiple industries. You can have a CPA license and be a great engineer if you wanted to be. You could really do a lot of different things, with the accounting thing. And so that's kind of why I went that route. And then immediately, once I got into my first accounting firm, a couple of different, larger accounting firms, I realized I hate accounting. I was like, oh, this is horrible.
Yeah, I did too. I did the same thing.
It was pain. It was auditing first, and then it went into tax. And tax, I thought, well, this is a little bit better. I like this a little bit better. But again, it wasn't something I wanted to do forever. And started with the big firms, and then went to industry, worked in there for a while, and realized that was boring. It was the same thing over and over again. So it was like, now what do I do? Here I got this degree in accounting, and I don't like public accounting, and I don't like industry. So what do I do? And I thought, well, I'm going to venture on my own and kind of do my own thing. And I guess back then, entrepreneur would probably have been the proper degree if I had an opportunity to pick a degree. because I actually, when I started Summit, I started it with the idea that, hey, I want to change everything about the public accounting model as it is, really just change the way that people think about accountants, the way employees think about accountants, and the way that, the actual industry thinks about it. And started right off the bat with, changing the way I dressed. It's like, back 20 years ago, if you remember, everybody had suits and ties, suspenders, you name it. You had to be totally dressed up and looking great, which is still, it's okay. But once I went into the private sector, I realized people made fun of those people. We called them the suits when we came in. Yeah, the suits are coming in. It's like, I don't want to be a suit. It's like, I want to be, I want to be something different. And so then that was one of the first things, hey, dress casual, dress like, you're dressed like the people that you're working with. If you're working in construction, you shouldn't have a suit on. You should have, overalls and, whatever, dress like your audience, and that was an important thing that it took a while to get people to kind of figure that out, but it happened pretty quickly. And then it just kind of changed to, 40-hour work week. I didn't want to work a bazillion hours. I coached hockey. How can I work a bazillion hours and coach hockey during our tax season? Right. And so that was a kind of an endeavor. I had to kind of figure out how do we change that model? Because I was victim like everyone else. I jumped right in and started the tax thing, right away. I did write-up work and tax returns for clients and billed by the hour and did all that stuff that I was kind of really against. And then it took about 2 years before I realized, hey, this is going to have to switch. And I if I'm going to hire people, I can't be, I can't have them work 50 hours, 60 hours a week and then me go home, and take the weekend off because I'm coaching my kids. I couldn't do that. That wasn't me. And so I had to figure out a way to make it so that we could actually, run an accounting firm, do exactly what we're doing, but make it so that the team didn't work a ton of hours. And that's where that's what kind of sparked the CFO model to begin with. Back in 2004 is when we started structuring it and trying to figuring it out, and death by 1,000 cuts, because we weren't successful with half of what we tried, probably not even 3/4 of what we tried. And, eventually we came up with the model that, hey, we're going to meet with clients on a monthly basis. And we're going to not just review what we did, the financial statements, we're going to get them timely. That was something that never happened back then either. So the first week of the month, we'd meet with them, or second week, whatever it was, meet with them, go through financials. But we were going to spend most of the time talking about cash flow forecasting and forecasting itself. And that's where clients really started to see the difference. That really kind of started differentiating ourselves, from everybody else.
Well, that was a pretty cutting edge model back in 2004, 2005. I mean, you were on the first edge of that, right?
Yeah.
Did
For
anybody
sure.
help you get there, or
No,
you just kind of had to
told me I
figure it
was
all out?
stupid and told me not to do it, and told me I'd fail miserably. I like to read tons. I read tons of books and go to many different thought leadership seminars and just kind of listen to what everybody says. And very rarely do I pull everything and I'm a gospel of 100% of one person or whatever. It's usually bits and pieces, and then things I don't like, I kind of discard. And during that time, when I was telling people, hey, I'm going to be a thought leader in this industry, and I'm going to really kind of do things differently, and my team's not going to work a bunch of hours, and I'm not going to bill. And they told me that I was going to fail. He said, there's no way that this could even possibly, work. Mathematically doesn't make sense. It's like, well, no, it's going to work. I'm going to figure it out. And, that was a big driving force. Right. And so,
yeah, it fuels the fire, right? It's like,
yeah. And it was like, they a lot of folks got it all wrong, and some of them still do. It's like, tax returns are great and it's needed and we need to do it. But what clients want is they want more insight. They want help.
yeah,
Especially during, the up and down economy that we currently haven't had over the last 10 years. They really, they're like, hey, I need help in making decisions. I built this great business, because I'm a great electrician or plumber or whatever, but I'm not an accountant. I don't have that something that comes to me naturally doesn't come to that, those folks. And that's where they needed the guidance, someone sitting beside them. So that's when we started the forecasting model, and forecasting, we would actually not just look at the income statement, but flip it over in the balance sheet and show them, hey, in December, you're going to be short on cash. You got to borrow a line of credit. You okay with that? They're like, really? What, seriously? And they had that big of an insight to their financial position, because the forecast wasn't just putting numbers in and increasing by 10%, all this kind of stuff. It was like, figuring out what was their drivers of revenue. What were those non-financial indicators that drove revenue? Was it, if it's a car shop, is it the number of cars that are coming in? Is it how fast the cars are in there? Is it, those are the types of things that they actually could control. They couldn't control dollars and cents. They had no idea what profits were. They didn't really know how to figure it out, but they knew how to do their job. They knew that, hey, if I have to do this many appointments a day and this, this at this average rate, I can control that. And that's what drove their success. And that's what really started turning things around for clients.
Yeah. I think accountants assume that, like, well, obviously you're going to run out of cash in December, right? We assume that they know that stuff, but they don't know that stuff. We take for granted what we see is so obvious.
Yeah. It would be the same thing as an electrician. Hey, go ahead and wire that junction box. And you're like, I'm an accountant. I have no idea how to do that. That's why I hire you to do. Well, it's really simple. You take these wires and you do that. And it is a simple process, right? But it's a simple process until you screw up.
Yeah.
And that's kind of what it comes with us.
Yeah. Brain surgery is easy as long as you know what you're doing. That's what I've heard.
Yeah, exactly. Yeah. And when something goes wrong, how to fix it.
Yeah.
That's the big thing. But that kind of led to the subscription-based billing. It was one of those things when I bootstrapped the company, I didn't have a bunch of cash. It was just, me and maybe $10,000-$15,000, and that was it.
Yeah.
And, I had to figure out a way to not be the bank, because it was killing me that we go into these meetings. Now I'm meeting with clients on a regular monthly basis. A lot of times I was meeting with them or going through cash flow, and they may be struggling, and then I'm pushing my payment off because I'm in the meeting with them. And, it was just one of those things that I couldn't sustain that type of thing.
Right.
I didn't want the meeting to be about me and collecting on 3 months of receivables that haven't paid, that type of thing. So we thought, how can we do this so that we would get our money, on a regular basis? And I'm like, hey, I'm just going forward, this is how we're going to do it. Every month they're going to get an ACH out of their account for the fee. And, it's going to happen in perpetuity until they cancel the service and they sign on it and everything. And absolutely no pushback. Clients like, no problem. I'm glad I know what that dollar amount is. It makes it easy for me to budget.
Right.
Not chasing, the hourly bill again. And that kind of led to from monthly to weekly. We thought, why are we billing monthly? Why not just bill weekly? No different than if it was like an employee type of relationship. And they're like, yeah, let's do it. And so we started doing the weekly thing, and again, no pushback. And it was like, oh, this is pretty cool. And so you can kind of guess what my favorite day of the week is. It's Monday. And, we built our practice to a $10 million firm. You can guess how much money's coming in every Monday. It's kind of like, this is a cool day. So you might not like Mondays. I love Mondays.
Regular cash flow, steady coming in.
Yep, exactly. No, yeah, $10 million firm with 0 accounts receivable. Actually, negative accounts receivable. We look at it because we collect all of our money the day of the week.
Yeah,
we perform the task. So
we just had a firm that we sold that does the same thing, and they had to write a check to the buyer for the prepaid, the collection, the unbilled, unearned services, I should say.
Unearned services, yep. Mm-hmm.
Well, you're doing all this virtually too. So you've got a virtual model, the VCFO.
Yep. Mm-hmm.
Tell me a little bit about how did you make that switch? I think you mentioned before we started recording, you kind of like got virtual in the 2012 era around there.
Yeah. So the idea was, when we created the VCFO model initially, it was meeting with clients. They would come to my office. We would go out to their office. It was kind of clunky. And I realized pretty quickly that this would be hard to scale. And so, because I can't bring people with me to every client meeting type of thing. That's not going to work. So how are they going to be me? And so then we started actually doing, that's when, we talked about the internet started really changing in about 2008, 2009. It started becoming where you can actually have video and, that sort of things. So we thought, hey, let's meet with clients over the internet here. Let's do this use this video stuff. And clients loved it. They're like, "Oh, this is kind of cool. It's a new technology. It was very, very new." And they're like, "This is kind of neat because you don't have to come out to my office. I don't have to, show you around. All the kind of stuff." And they like the fact that, hey, if I'm running 15 minutes late, it's not a huge deal. We can kind of just move it around a little bit, and you're not sitting out in my conference room. And they really liked it. And we thought, well, this could be easily scaled. Plus, I could also bring somebody on with me, like a senior account level person, and they can hear what I'm saying. And we're not playing a game of telephone if I had to make some changes to anything. And it was a good training tool. So it was like, well, this is pretty cool. We did this for about, from 2000, probably 7, 8, ish, somewhere in there, until about 2011. And we thought, you know what, we can do this for our clients. Why can't we do this, for us individually and go fully remote ourselves? And we got the idea from a company out of Rhode Island called Lullabot, and they were one of our first true virtual CFO firms or services where we actually couldn't go to a client. Because like I said, we used to go right to the client. They come to us. Well, we thought, hey, let's do this virtually completely. And they were kind of the guinea pig. They're like, oh, this is great. And to find out that they're a fully remote firm themselves. They had 60 some employees. They were one of the first 25 firms ever to go remote, fully remote. And that was a huge thing back then. And we kind of learned from them. And it was kind of we got probably as much information or learned a lot from them as they learned from us on the CFO side. And about 2 years later, in 2013, I thought, hey, let's do this. Let's be the first accounting firm to ever go remote. And so we did it. We went fully remote. At that time, we only had about 18 folks. So we weren't huge. And you can imagine when I went into the conference rooms, we did stand-up meetings and told everybody, hey, everybody's gonna work from home. And they're like, we always start with a joke, and they thought that was the joke. and then I was like, they're completely anti it. They're like, no, we can never do that. I got kids at home. Clients need to see us in person. You name it. My technology. It was like before the pandemic. Everybody's like, there's no way this can even happen. And so I thought, well, heck, am I going to actually sacrifice my entire firm and lose all my people, or do I just stick with it? And I thought, well, I'm not going to go remote. I'm going to stay brick and mortar. And I thought, you know what, I'm going to redo the offices because I own the building, and I'm going to make it bigger for growth. Maybe 30 people someday, and really make it really nice. And so I took it. So we kicked everybody out of the offices for about 6 weeks, and we gutted them completely, tore all the walls out. Construction was going full bore. We really made it cool, Taj Mahal type office. And I was so excited about when they were coming back. And it was kind of funny. It was like day by day, you get closer to the time we're going to have everybody back. And one person at a time say, I really like this remote thing. Do you mind if I work from home? I'm like, yeah, that's fine. Go ahead. And then it was my partner's like, dude, I don't think I could ever come back to the office. I'm like, huh. And so then it was like I did the grand opening, and like 3 or 4 people came back, and everyone else wanted to work remote. So I'm like, oh, well, this is kind of interesting. Spent $100,000 or whatever I spent on it, and could have taken everybody to Hawaii and had a great time versus put into a building. But it sparked the catalyst, and so we thought, hey, if we're going to do this, let's do this. And so from there on out, I started hiring people outside of Fort Wayne, Indiana, where we started, and really made this remote thing nationwide. And it was kind of interesting because how do you recruit nationwide? I was having a hard time recruiting in Fort Wayne. How do I do that? And it was kind of neat. The more that I marketed the virtual CFO services, we've been marketing it from day one. Doing the tons of inbound marketing. Thought leadership. The whole thing. People started Googling me, and they'd find me in New York, and someone like, oh, this is kind of neat. Someone found me in New York. Looking for employment, but it was only trickling in a few here and there. And then Forbes wrote an article back, and I think it was 2015, and they listed the top 120 or so fully remote companies, and we were one of them. And I was like, this is pretty cool. And then all of a sudden my phone just like blew up. It wasn't my phone, it was my internet. I was actually on a Zoom call like this with you, and at the bottom of my internet, it just kept blinking. It was like every 2 seconds another resume would pop up. I'd have the notifications on. I was like, what is going on here? And it did this through an entire Zoom call with a client. I'm like, I have no idea what's going on. I can't turn it off. I can't figure this out. I think someone's Zoom bombed me, or not Zoom bombed me, but whatever they did with the email. And to find out, it was that article got published, and people heard about this remote idea. And I was getting resume after resume. I got about 2,000 resumes in about a day and a half.
Wow.
And, yeah.
What you could sell those leads for today for people, right? Like,
oh, I know. Tell me about it. Tell me about it. Yeah, because we still get tons of resumes a week, and which is kind of cool. We've been we were one of the first ever to do it and provide the virtual CFO services. And it's really grown up to what it is today. And when I say virtual CFO, I don't mean there's 2 different things. There's what we call CAS 1.0 services, and then there's CAS 2.0. CAS 1.0 is kind of like the back office, the paying the bills, invoicing, stuff like that. We do that for about a third of our clients. 100% of our clients, we provide a higher level of service where we're actually meeting with them more frequently, we may do some of that, back office stuff, but the idea is meeting with them more frequently and providing with strategic, ideas and growth and forecasting and KPIs and dashboarding and doing a lot of the strategic thinking that CAS 2.0 is now the vernacular for that we provide. We've been providing that since 2004, which is kind of neat. So it really kind of a grew up model to where we were providing virtual CFO services to clients, thinking virtually, and then doing it remote, which was like adding another layer. So it would be kind of interesting. We'd be on meetings with clients and maybe our client would have 3 people in the meeting. One would be in Rhode Island and Texas and New York. And then my team would be in like New Jersey, Indiana, and Florida or something like that. And you have 6 different people meeting together for a CFO meeting, which that would have been like laughed at.
Yeah.
It was laughed at back in 2000, 6 and 7 when we first started rolling it out.
Yeah. Well, it's so cool. I mean, you just adopted this stuff. Like you're just an early adopter. So you mentioned Hawaii, and I noticed you have a Hawaiian shirt on.
Yeah.
You mentioned you dress casual, but is there a story behind the Hawaii shirt?
It's kind of funny. The short story is that when we were looking to go remote, we went to a conference in San Diego, and at that time we weren't making a ton of money and everything was very, very tight. And so I went to this conference, and it was 25 companies that, one of the top first 25 companies ever to remote. We're at this conference. They're trying to teach people how to do this remote thing. And so that's what I'm kind of dabbling in. I already had a client that has done it, and I had that client for like a year or two, whenever it was. And then so I thought this is kind of the next stage. And while we were there, a company came up to me and said, hey, I noticed that you've got a few creative agencies or marketing agencies. I'm like, yeah, I do. And he goes, would you be interested in speaking in front of, 30 owners of marketing agencies and kind of teach them how to be profitable? I'm like, yeah, sure, I could do that. And they're like, when? And I'm like, they're like, it's in New Orleans in a couple of weeks. I'm like, okay, I can do that. And here I didn't bring my wife with me to San Diego because we're kind of tight on money. And now here I'm going to tell her in 2 weeks that I'm going to New Orleans. I'm like, this is going to be an exciting conversation. But so I went home, had the conversation. She said, yeah, that's no problem. I get it. But in the meantime, I pulled a muscle in my neck and I could hardly even move. And so went to the chiropractor. I'm on medication, all this kind of stuff. And I'm like, what am I going to tell this group of people? I had no idea. And so I flew down to New Orleans. I got there, but my luggage did not get there. My luggage ended up in Nashville. And so I had nothing. I had gym shorts, a t-shirt. I had nothing. I had nothing. and I was hurting. And so I just happened to walk across the street.
Recipe for a great speech.
Oh yeah, tell me about it. It was like a speech. Like, oh my gosh! I walked across. I got to the hotel. I walked across, and to this. It was in New Orleans, and there was like a cruise ships came in. So I walked over there, and first thing I bought was a leave for my neck because it was killing me. And then I got a cell phone charger because my cell phone was dead. And I'm like, okay. And I got a bottle of water. And then I look across the street, and across the road, there's a Tommy Bahama. And I thought, well, they said to be different. I think maybe I'll do that. So I walked over there to the Tommy Bahamas. Never been in there before. And I'm looking at these shirts, they're like $150 each. I'm like, oh my God, my wife's going to kill me. So I had to get something. So I bought 2 shirts. I bought some shorts. I basically was decked out in Tommy Bahama, right? And so then I go to pay for it and my credit card gets denied. I'm like, what the heck? I don't travel ever. My card got denied. I'm like, what's going on? So I got my other card. I had 3 cards with me, got my other one out, went through no problem. And then I went next door to get some shoes. I had no shoes. I had gym shoes on. I was like, I can't wear gym shoes and talk to all these, executives. And so I got some shoes, went to pay for it, same thing, card got denied again. So it was my second card. I pulled out my debit card. I'm like, I know I've got money in here. And so I gave my debit card and went through. And so I go back, I'm in a hotel, I'm getting all ready for this event thing right at the beginning. And, with the event thing, it was like a warmer where they had dinner and hors d'oeuvres and that sort of thing. And so I'm sitting at the table with 30 folks I've never met before, and they're all owners. And I'm like, hey, I'm going to pick up the appetizers. Hey, I'm the finance dude. I'm going to pick up the appetizers. I'm like, oh, that's cool. And so I get with my debit card, and it got denied, of course. So all 3 of them got denied. I'm like, so I'm looking at the guy next to me, and I'm like, I have no idea what's going on. He's like, oh, you don't travel much, do you? I'm like, no, I don't. And he's like, oh, it's the credit fraud stuff, and so you have to go back and get them all call them and get them all verified. I'm like, oh, okay. I go, by the way, can you pick up the appetizers and the and my meal? And he's like, so I went back, I got them all, all the credit cards, things released and everything. And I showed up the next morning and I'm flustered. I'm like, I have no idea what I'm going to tell these people. Here I am, and I'm wearing a Hawaiian shirt. So I started off and I just explained the situation. Here's what happened. Everybody laughed. They thought it was so funny. And I go, hey, I'm going to teach everybody how to be profitable. And so I got an easel board and I just broke it down. Hey, here's one person. Here's what their average bill rate was, utilization. I kind of broke it down into their terms. And then I broke out a company of 20, and I go, how many people, would fit that model? And they're all raised their hand. And I'm like, okay, could you increase your average, your average, price by $10? I'm like, yeah, how about 20, 30, 40? And then I said, well, let's just go with 10. I go, if you did that by 10 and you realized it, I go, here's what your nest egg would be at the end of the day. It was like $300,000. Everyone's like, oh my gosh, I didn't realize how that small impact would be. I did the same exercise with utilization. If you build 2 more hours a day or 2 hours less, what's that impact? And they're like, oh, I didn't even realize. I thought it was just giving them, free time. And so it was one of those things that Twitter, back then wasn't on Twitter. Twitter just blew up. They were tweeting everything. And I was like, oh, this is kind of cool. And I thought I failed. And I'm like, oh, this was the worst thing ever. I'm here and I had no PowerPoint, nothing. I just had my easel board. And the guy came up, he goes, dude, you hit that out of the park. That was the best. That was by far the best I've ever seen. I'm like, you gotta be kidding me. And he goes, would you be interested in doing this again? I'm like, well, sure. And you go, when's the next one? I'm waiting for it. And he goes, it's in Chicago. I'm like, oh, perfect. Chicago. I live in Indiana. So that was like a 3-hour drive. I could do that. No problem. And so it was in a couple of weeks. I went to Chicago, ready for the same presentation. This time I was ready. I had Dockers. I put our emblems on our shirts here, the Summit CPA logo. I had nice polo golf shirts here, and I showed up at the event, and the guy met me in the lobby, and he goes, "Dude, what are you doing?" I'm like, "What do you mean? What am I doing?" He goes, "Well, where's your Hawaiian shirt?" I'm like, and then all of a sudden it just dawned on me. It's like, wow, here I don't want to be the typical CPA, so I'm not wearing suits, but then I wear a typical CPA stuff at a client event, and it's like it was just dawned on me. So I went out and bought more Hawaiian shirts, dressed up the rest of the weekend, and ever since I've worn pretty much Hawaiian shirts, just kind of dressing down, having, to dress down to what the audience is, what your group is.
Yeah.
And so
well, it clearly worked. It clearly worked for you. So might as well keep doing it, right?
Oh yeah, they can pick me out at an accounting event, that's for sure. And when I speak, like I'll be speaking at the DCPA coming up in Austin, and they'll find me right off the bat. It's like they'll look me up and say, "You must be Jody." I'm like, "Yep."
Nice. Yeah, so you're gonna be in Austin in December. We looked at that event and had a conflict, but man, I really wanted to go to that. So you're speaking at that?
Yeah, I'm actually the chair for that event. So they named me the chair, and so they've got a special speaking part for me, and I'm doing a couple of conferences and or a couple of different talks throughout the event. But so I'm chairing that event. That'll be the first time I've ever chaired an event, so that's pretty cool.
Very cool. What I keep hearing is like you're adopting these things really super early. You're kind of willing to get in there and roll up your sleeves and figure it out and take some imperfection. Like you're willing to accept like a little bit of messiness, if you will.
Yep.
So I got to think your tech stack now has probably come a long way. So can you share that? Like share some of your
sure.
tech
Be happy to share. Yeah. So with our tech stack's always changing. So we're always looking for the next best thing. And that's the key. So we're never attached to one software. And so thinking through that's got to be that's the mindset we've always used. So what we're using today might not be what we're using tomorrow. Something better might come up that's going to benefit the client, benefit our team, benefit, really the whole situation. And so we're constantly looking to improve. And so, like I said, originally, we started with Excel, and that was everything. We did everything in Excel. That has a lot of flaws in it. Obviously, everybody knows it breaks down, links die, all that kind of stuff. And so we had to get away from, on our forecast, we had to get away, look for a tool for forecasting. And for short-term cash flow forecasting, we use a tool called cash flow forecasting tool. And it's by Finagraph. So it's pretty simple. It's real easy to know. And that was a game changer. It basically saved us about 3 to 4 hours of cash flow prep for the cash flow meeting, because we have a meeting once a week with our clients, cash flow meeting. And so it was, think about that, 4 hours, 3 to 4 hours a week for 150 clients. That's a lot. That's a lot of time savings. And so that's huge. For the long-term cash flow forecasting and forecasting itself, we use two products for that. We use Plan Guru, and then we use Giraffe. Those are the two that we use. And the way I explain one is, if you remember Access and Excel, Access is kind of like Giraffe. So if you're really good with that type of thinking and technology, Giraffe's definitely the way to go. If Excel is your type of thinking, then maybe Plan Guru would be. And so that's kind of the different philosophy or the different thinking that I have with both of them. Both are extremely powerful, and they do a great job. And that's really cornerstone to our service. Reach Reporting is our reporting and dashboard software. Giraffe and Plan Guru and Quick QBO, they all work really well with it, Zero, so that you can bring information in, massage that information, and shoot it out. It makes it really simple. So Reach is one of the biggest things that we use, because it not only provides financial statements and streamlines that entire process, but it provides dashboards that even you and I can go in and fix and change and make modifications to. I don't need a programmer to go in and do it. So it makes it really nice for for even someone just starting right out of college. They can go in and make some changes to the dashboards, and those dashboards carry over from client to client. So that's kind of nice too. So I make a change on mine, I can push that out there and everybody can get that same change. So again, it's not like the Excel where you've got to go through, change everything again. And then with the accounting platforms, QBOs are our go-to, desktop, Zero. We're pretty agnostic when it comes to the accounting software. Harvest is what we use for time tracking. And then when it gets into marketing, we have HubSpot and HubSpot's what we use where we keep our website and do all of our inbound marketing. And then also we use PandaDocs along with CPA Charge for our invoicing and billing process. So that's it's kind of a 1-2 punch. Meet with the client, have the electronic engagement letter sent to them, and then the CPA Charge does the zapping of the money, every week, type of thing. And then from there, it goes, from tax, we use Access for that. So everything's got to be completely remote. It's got to be completely cloud-based. We don't have any software that resides on someone's desktop, maybe outside of Excel. We do have, I'd say folks do have Excel on their desktop, but they also use the cloud version. So they use them both. One's a little bit more powerful than the other. That's the only reason we'd have one versus the other. And so it's the Microsoft platform for that. When we use Teams for internal chat, we use Slack for external chat. So with meeting with clients, we set up all of our clients on a Slack channel.
Oh, that's cool.
Use that for external. We for conferences like this, we meet with our clients all virtually through Zoom calls or Teams calls. We used to use GoToMeeting. All three are very capable. Not much difference between one versus the other. So all are great there. Trying to think if I left anything out. That's like I said, it changes pretty much daily. I told you all these great things, and by the time you have this, by the time people start listening to it, we'll probably maybe be on one or two others. So change is important, not for change's sake, but to better the whole process and better people. People are so hard to find nowadays, and they're really hard to retain. So it's important to find things that's going to make their job easier and more enjoyable. And if they're stumbling around on something and you lose somebody because of a software, shame on you. That's how I look at it.
Yeah. Well, I'm curious about your most recent news. So you had a merger.
Yeah.
That's a big deal. So tell me what your experience has been with that.
Yeah, for sure.
And what are the advantages you see going forward after post-merger?
Yeah, no, great question. We merged with a company out of St. Louis called Anders CPA Advisors. They're a top 100 accounting firm. Going into the merger, and it happened fairly quickly. I spoke at Engage. I think I spoke regarding maybe working as a distributed company culture and stuff like that. And somebody from Anders saw me speak. They're in the audience. And then about 4 months later, I got a call and said, "Hey, we'd love to talk to you." Well, we've been growing so fast. We double our sales every 3 years. So you can see the growth potential. The growth is going high, and we're very profitable. We maintain about a 20 to 25% operating income there at the bottom line. So we're profitably growing, firm and fully remote. And so you can imagine all the calls we get. It was pretty much regularly. We get called from, I would say probably out of the top, probably 50, we probably got called by half of them at some point, just at some point, just kind of inquiring about us. And I don't know why I agreed to the call, but I did. And it was one of those things. And they talked the right thing. They talked about their culture and everything that was great. And didn't want to break us up, and they, everything, because I had like 5 different things I wanted to make sure that one, I had a seat at the table. If I'm going to be a partner here, I need to be a partner there, and that was important. And then the buyout had to be, not a typical buyout. It couldn't be, I get money when we retire. It's like, I didn't want that. A lot of firms say, we'll just put you in our partnership program. You get this great benefit at the end. It's like, I don't want that. So I wanted to buy out. That was actually part of the third one, which is one that I could take some, money off the table today, but also I could take more money off the table in year 5 or year 4, whatever the term was. So we made it a 2-stage deal, which, I took 60% from day one and then spread over 5 years. And then also made equity partner. And then year 5, we're going to be revalued based on specific criteria. And then that 40% is going to be the value in year 5. And so I like that idea a lot. That was actually my idea. So that to do it in that manner, because what I wanted to do is I wanted to come up with a way that, because there's no reason for us to sell. We're so profitable. I could be in the board of directors of it and still grow forever. But I thought, hey, if we could sell this and I could actually make more money by selling it than what I could had I kept it, then that's a win for me, but that's also a win for them. And that was important, that whatever deal I structured, it wasn't so biased to me that it hurt them. I wanted it to be equally important. And I thought we could definitely do that. And so our goal is to do a 5 times revenue over the next, over 5 years. So $10 million to a $50 million firm. In a typical growth pattern, we'd probably hit about 25 to 30 million, somewhere in there, if we continue to grow the way we have. And there's no reason why we wouldn't. So again, that's another 20, basically doubling what we would have traditionally grown at. It was exciting.
Did you see an opportunity, like you could say, like, hey, I can leverage my skill in this and I could take it here and add value for the whole thing? Is that, that's had to be what you were thinking.
That was exactly what I was thinking. I was like, wow, that would be great, because, we always hire to our capacity, right? So as we pick clients up, we pick people up. And we've always done that. And the problem with that is, there's no problem with that. First of all, that's an okay model. But if you're looking to eventually sell, you're going to have big dips, right? You picked a bunch of people up, your profit might not be as big. And if it ended on the end of the year, then it's like, oh shit, now I got to explain this down the road sometime. And so I thought, well, we can't do that, because eventually I'd like to sell eventually, but I would need to have at least 3 years of solid profit margins without any explanation, right? To get the highest multiple. And when they approached me, they're like, yeah, we'll take short-term losses for long-term gains. We understand that you've got to ramp up, and
cash
and
growth
so
eats cash. Growth
eats cash. And I thought, well, that's great if they're willing to, obviously we're not going to be in the red or anything like that, but if they're willing to ramp it up where they can absorb a little bit, knowing that, hey, we're going to get to that $50 million mark, double the size of the company within 5 years, that's an exciting model for them. And it's exciting for us too, because if I could actually share in the profits of doing it that way, and getting it to that, then it's a huge win for me, and it's a huge win for Adam, a huge win for our team, a huge win for Anders. And that was that's what made the whole idea sound pretty cool. And the key though was that you'd have to be the same company, right? We'd have to continue our inbound marketing. Clients are always coming to us already, and all the stuff that made us what we were. We had to keep that in some manner, and that's what we're working out right now as a division of Anders, keeping our same name and all that kind of stuff, so we can continue driving the traffic to our site, both employees that are looking for work as well as clients that are looking for a CFO.
Awesome. Well, what is your role in the combined companies?
So basically, I'm head of the CFO division, no different than I would be if I was running the company. So I was CEO and co-founder before. Now I'm equity partner, and head of the CFO division. So basically doing exactly the same thing I was doing before, just with a different title and a different name.
And a lot more resources,
which is nice. Yeah.
Yeah. Awesome. Wow. So how long did it take from like that first conversation till closing?
It was pretty quick. We started the first conversation in October. So I gave the talk in April or May, whenever Engage was. And then by October is when we had the first meeting, and we'd signed the deal by April. So it was April 1st or April 2nd, I think, is when we ended up signing the deal. We tried to do it on April 2nd, so it wasn't a joke, but we did the deal then.
That's cool. Did you have to have a conversation about the Hawaii shirt? Like, hey, this is my dress. I'm
Yeah.
not
Oh,
changing.
yeah. I have that conversation with everyone. So if they want me to speak or whatever, I'm like, hey, I'm going to wear a Hawaiian shirt. You okay with that? The DCPA was kind of funny. The first time I did it, the DCPA, like, are you sure you want to do that? I'm like, everybody's going to have suits. I'm like, positive. Here's what I need to do. And they're like, yeah, that's probably, they always, yeah, I was like, yeah, that sounds great. And now it's like, absolutely. They had no problem with the shirts. They've had no problem with the culture. We always rank high in culture. If you did any kind of poll that we've ever done, we use Amplify for our quarterly polls, and we always are in the top 80 some percent, 89, 90% when it comes to client satisfaction. And a lot of it just has to do with all the things that we talked about. And Anders did not want to lose that at all. And so they're like, hey, Norm, keep everything status quo. We don't want to change the way that you pay people, which is really different than a traditional accounting firm. We don't want to change the way that people work. Let them fully remote. We don't let the hiring process, everything they wanted to keep the same. And so that's been a godsend. That's been one of the things was really important for me when making that decision.
Yeah. Well, they liked what you were doing and they wanted you to keep doing it. So It sounds like that was a good match, because that's not always the case, right? There's always some blending. That integration can be kind of like, it sounds like you have a very good match.
Yeah, the integration's been great. Now, it hasn't been perfect by any means, and I'm not going to stand here and say it has, but it's been really good. And
Yeah.
it wasn't one of those absorption things. Like a few of the bigger firms just wanted to bring us in and absorb us. We would no longer have an entity, no longer have any kind of, we would lose everything that we actually did, and I had no interest in that. I'd rather have been on the Summit board of directors, making a little bit less and earning a dividend than doing that. So
Yeah.
it was definitely a good match for sure.
Yeah. Awesome. Well, I got a couple of questions and we'll wrap up today.
Sure.
Just some quick fire books. You said you read the books or used to read a lot of books.
Yep.
What's one that you would recommend right now?
E-Myth is definitely one that I founded the entire business on. That's one I've read, probably 10, 15 times. And that by Michael Gerber, highly recommend it. And it's just simply setting processes up so you can be the McDonald's. If you want to grow and if you want to grow and scale your business, then you've got to set those processes up so that everybody feels the same. So if we have a CFO coming in, I want that client to feel the exact same with any one of the CFOs I put in place. Obviously, there's little nuances there because of personalities, but for the most part, the same delivery. And so E-Myth is huge. I would say Traction by Gino Wickman's also a great one, and that's to keep your modeling and your basically processes and stuff. Pinnacle is a great organization, also kind of in competition with that we highly recommend, and they've got a super book there too. I'm drawing a blank on a lot of the different books, but I would say those are probably the three books or organizations. I guess Scaling Up would be another one.
Yeah.
You can always get a little bit out of.
Yeah. Vern Harnish, Scaling Up. Yeah. It's all about structure, right? Like a lot of those books that you just mentioned, it's all about kind of like the big structure, which is I think a lot of accounting firms don't have the big structure in place. They're so a lot of them have just rely on the status quo for their structure. And
until there's pain, they won't change that, right? I mean, it's going to stay the same until there's pain. And unfortunately, the pain could be very big and hard. And that's what I'm hoping doesn't happen to a lot of CPA firms is that issue.
Yeah. And it's funny. And I've been saying this on a few of my podcasts recently, that I always thought that the technology was really going to drive the change in the industry, which it definitely facilitates it. But I think the staffing crunch is probably driving more change right now. And it's causing faster adoption of the technology, but that's what's forcing people to change right now.
Yeah, I think so too. Yeah. And it wasn't until the pandemic really, and that really started really hitting that hard, because we've always had problems hiring people, right? But now we've really had problems hiring people. And so you need people, processes, and technology, all three of those working in harmony in order for it to work. And that's when you have one of them falling off, then the others are going to pick up to balance it back out. And you're 100% right. Yeah.
Well, so you've had a wonderful, fun career. What would you say to somebody starting out, just starting a career in public practice?
I think it's a great opportunity. Yeah, definitely a great opportunity. Don't just because something's done that way all the time doesn't mean it's going to be that it's got to be done that way going forward. If you see opportunities to make changes into it, dive into it. Don't be afraid. Don't be afraid to take a risk.
Yeah.
Risk is something that, it has a lot of rewards to it if done properly.
Yeah, I agree. And I think there's a ton of opportunity in the profession because of the disruption that's going on. And there's, if you're entrepreneurial like you are, Jody, like I think there's just so much opportunity. It's funny because my career path was very much like yours. I jumped into audit at E&Y. I hated it right away.
Yep. Horrible.
Went to a mid-sized firm. Yeah, I just kept shrinking it down until I liked it.
Yeah, that's exactly right. And the problem is I ended. I didn't like it. I was like, what am I going to do now?
Yeah, you shrank it. Now you're coming right back up.
Yeah, it's like, I got to go back in and do what I didn't want to do.
A little difference being, at the top of the org chart than it is at the bottom, though.
Oh, yeah, that's for sure. That's change is a lot easier to be made. That's 100% sure.
Well, I have enjoyed this conversation immensely. I can see why people get you to be on their speaking stage. So this has been awesome. So I want to share a couple of things before we sign off. A couple of ways you can get in touch with Jody. You can go to their website at summitcpa.net. You're on LinkedIn. We're going to share these in our show notes. Jody Grunden, LinkedIn, and you're on Twitter, J Grunden, right?
Yep. That's
awesome.
Correct.
Well, thanks so much. This has been a lively one today. Thank you.
Yeah, thanks, Brandon. This has been great.
Thanks for listening to the Accountant's Flight Plan podcast. If you like what you heard today, please follow us so that you can get updates when new episodes are released, and share our podcast with your friends and colleagues. You can also follow PO Group Advisors on social media. Please visit our website for more information at pogroupadvisors.com.